All right, I am here in Omaha, Nebraska with my friend Gary Dvorchak, Managing Director of Blueshirt Group, a premier investor relations firm, I've known Gary for many years. We met in Beijing, right?
Yeah.
Gary, you have your finger on the pulse of the IPO market, especially a lot of Chinese IPOs in the U.S., more than anyone else I know. That's been a bit of an up and down cycle. NASDAQ got a lot more strict, and you're getting the benefit of that, I guess, is higher quality companies going public. Would you agree with that?
Yeah, actually investors are getting the benefit of that, right? So the filter has gotten a lot stricter, but having said that, and this is kind of the surprise for people, there have been a ton of Chinese companies that have gone public in the last couple of years. In 2023, there were 40 to 50, but all microcap, right?
Yeah.
So they raised 3-5 million, 20, 30 million market cap, which is fine. What investors and what the institutional investors are waiting for are the real companies, if you want to call it that, or the big companies. That has been nothing. So we have a lot of companies that we're talking to. They would love to go public in the U.S. And they're waiting for a couple things. One, market conditions, because honestly, there have not been a lot of U.S. IPOs, right?
Yeah.
The IPO market opened a little with ARM in September. It closed. It opened again now with Reddit.
Yep.
Blueshirt client, by the way.
Oh.
And so people are, if the IPO market can continue to warm up, a lot of the Chinese companies that have been waiting for decent market conditions, they'll pull the trigger and they'll go. And so then we'll see the bigger, more substantial companies, because China has a lot of great high quality companies, and they would be welcome in the U.S. market, but they got to get a valuation that's decent.
But given where multiples are at, they'd probably prefer the U.S. to Hong Kong or Shanghai.
Exactly.
Shenzhen. Yeah.
A lot of during the audit issue, during COVID / the audit issue, a lot of companies that wanted to list in the U.S. and actually a lot that already were listed were looking at Hong Kong because they're like, okay, the U.S. is not a viable market. We can't get the valuation. So most of the companies we were talking to had pivoted. They're like, okay, we're going to list in Hong Kong. But now Hong Kong has been a disaster. Yeah. So they are all coming back. The other big issue is now to list in the U.S., you have to get Chinese regulatory approval. The CSRC needs to approve your listing, and they're looking at, are you a systemically important company?
I heard that's not a slam dunk. I mean,
quite the opposite. It's very difficult. And there are what I call national champions, systemically important companies, sensitive companies. They're never going to get that approval. And the lesson for everyone was Didi, because Didi was told not to list. They did, and they pulled the rug out from under and just like
it didn't go well if someone's new to the story.
And so companies like ByteDance, never going to list in the U.S. That's fine, but there's a whole swath of mid-sized companies that are not national champions.
Systemically relevant.
They're good, and they need capital. And this is the thing that the Chinese government, the Chinese companies, they need money. Right, they need capital. They know they're not going to really get it in Hong Kong in the near term. So the pipeline of wanting to go to the U.S. is suddenly burgeoned. There's probably hundreds of IPOs waiting.
Wow.
Yeah, but they got to have the right conditions. So there's a lot that still has to happen.
Yeah, the stars have to align. One star I want to ask you about, I know this is going back a little bit, but the audit issue, right? Because for those who follow the story, for 20 years, Chinese firms were basically not complying with this idea of the audits had to be auditable, and suddenly they did. And it was a game changer in one respect, but then a nothing burger to other people, depending on where's your needle settle on that topic?
Well, I mean, two things. One, if you want to list in the U.S., you got to play by our rules. Just like if Apple wants to operate in China, you play by their rules. So those are our rules. So it's like, that's it. You have to do it. And then the second thing is, during that time where they were fighting about it, I mean, everyone's worried about mass delisting. Like, if they didn't settle it, every single Chinese company would have had to delist.
It was a real threat, $1 trillion
and this
or
is,
whatever.
Alibaba, JD, everyone would have had to delist. And that would it would obviously hurt the Chinese companies, but also the Americans are like, all the pension funds that own Alibaba. Like, there's a lot of American money that would be wiped out overnight. So I think the Americans had to bend a little bit and say, you're going to play by our rules.
And a lot of American investors want these stocks.
We will figure out how to settle this. And then the Chinese are like, we need that access. So both sides were aligned. The incentives were aligned to we got to get this solved. And they did. And then boom, all that risk was taken out, and all the Chinese stocks, they bottomed in October of 22 because of the issue, and then boom, they all were up like 20, 30, 40%. There's still other issues out there, but that one being removed was a big one.
It's kind of heartening in a way because, I was kind of a pessimist, and a lot of people were pessimists, but this really showed that positive collaboration is still possible, sometimes defying expectations in a good way. So I think that's a heartwarming story.
Yeah.
Speaking of heart, or let's say wallet warming, you just shared with a crowd in an event we were both at, Gary, a stock that you own, literally 1 million, you and your family own 1 million shares of. I don't give investment advice here at BBAE, but you can talk about what you like. Can you tell us?
What I'll do is give an idea, and the viewers can do the research and decide on their own.
They should always do their own research.
I brought the idea up for two reasons. One, especially our crowd here is a Chinese event. They're very practical, and you spent the whole weekend here. Like, do you have money-making ideas, right? And there's, I was in the meeting all day. It's like a lot of, life advice and blah blah blah. Like,
mostly life advice.
How do I go home and make money? And so the idea I offered is my single best idea. It's the biggest position that me and my family have. And like I mentioned, all in, we own 1 million shares, which is a lot for us, and also it actually puts me as one of the largest individual shareholders. And the reason I put this big bet on, this is something that Berkshire followers, investors can really understand, is one of the best value ideas I've ever had in my life. So it's a company that does Internet of Things technology. So if you think of smart light bulbs and smart everything, appliances and all that, how do the consumer brands like build that intelligence in the IoT? And so Tuya has a software chipset, a total solution that you can use their technology to quickly build intelligence and connectivity into consumer products. And so they have literally hundreds of consumer companies all over the world. So not just China, but China's like 25% of their revenue. So consumer products all over the world that are using their technology. So it's a real company. It has amazing backing. The biggest shareholders are New Enterprise Associates, one of the biggest VC firms in the world, owns 25%. Tencent is the other big backer.
Like a Yahoo kind of company in China.
So this is a real company. And when I bought my first position in October of 22, it was depressed. They were going through an inventory cycle. And so revenue had started to decline. Any semiconductor company goes through these cycles all the time, right? It's just part of how the channel works. But investors were spooked. It was a China stock, So they had $1 billion in cash. So they raised a lot in their IPO. It was a $500 million market cap. So that business that is doing $250 million a year of revenue was valued at a negative $500 million.
Amazing.
And I was like,
it's like an extreme net.
Yeah, beyond. So why does that happen, right? Because you can find those situations 90% of the time they're biotechs, right? And why is it? Because they're going to burn through the cash. And so my thesis was that they will preserve the cash, they will turn the business around, and the business value is going to be something greater than zero. And what will it be eventually? We'll see. So during the course of, I bought a big position. I bought another big position during 2023. So the first one is at minus 500 million market cap. The business stabilized. The China audit issue we just talked about went away. So it popped. So now it's $1 billion market cap and $1 billion in cash. So that was a nice way to double your money very quickly. But it's still a compelling valuation because you've got 250 million of annual sales growing sequentially and year over year, 40% gross margin, profitable. It's not in like a dying industry. It's an exciting future growth industry, making money, right? And the business value is around zero, right?
There's a big China cloud hanging
$1 billion
over this
market cap.
Basically.
So there's kind of still this China cloud hanging over it, and their revenues from around the world. It's not. You look at like Baba, amazing company. It's a domestic, right? 100% China. Tuya is revenue from all over the world. So it's not a China story in that classic way. So anyway, this is the idea I gave to the crowd here, a value Berkshire crowd. You can buy a great business growing a real business. You pay literally zero for it. So I think, I have my own personal price targets. Everyone has to do their own research, but it's $1.80 now. I think maybe $3 by the end of the year. I think $5 after that. And that's based on going back to normal valuations relative to their peer group instead of zero for the business. So it's a fantastic idea, a value idea, growth element, good business, great backers. What more can you ask for?
Yep. From your perspective, it's a baby getting thrown out with the bathwater. And I'm guessing it is a blue shirt client for disclosure, but that's how you got to know them.
That's how I knew them to begin with.
Yeah.
Now I will make more on the stock than I'll ever make on the fee. So I even tell them, like, you don't even have to pay me, because right now, like, we're partners because, I own the stock, I understand the company. But yes, they are a client of ours. That's how we got to know them.
A chef who eats his own cooking. I think Buffett would approve of that too.
Exactly what you want.
Yep, exactly
what you want.
Gary, Managing Director of Blueshirt Group, thank you very much. You've been very generous with your time today.
Thank you for spending
if someone wants to learn more about your company, just what's the website they can go to?
So blueshirtgroup.com.
Blueshirt,
the website. And for Tuya, if they're interested, tuya.com. It's quite easy.
Tuya.
Tuya.
Like
that's a symbol. It's traded in the U.S. and in Hong Kong, because some Asian investors will want to buy it in Hong Kong. So, yeah.
Yep. Yeah. Awesome. Well, Gary, thanks so much, and hope to see you next year in Omaha.
No, I hope to see you sooner than that.
In China, maybe. All
in
right.
China, in the
thanks
near
a lot,
future.
Man. All right. Take care, guys. Thanks.